Good morning, everyone. This is the Med City CPA. I'm reading through the Form 1040 instructions and want to talk about IRA distributions. You should receive a 1099-R showing the total amount of any distributions from your IRA before income tax or other deductions were withheld. So, generally, if you receive the form, you punch in the data, but there's some exceptions. So what happens if you rolled over part of all of your distributions from one Roth IRA to another Roth IRA, or IRA other than a Roth IRA to a qualified plan, or other IRA other than a Roth IRA? Also enter rollover next to line 4B. If the distribution was rolled over, enter 0 on line 4B. If the total distribution wasn't rolled over, enter the part not rolled over to 4B unless exception 2 applies, which is down here. We'll get to that. Generally, a rollover must be made within 60 days after the day you receive the distributions. So you can't hold on to it. You have to make the rollover after you receive the distribution. So you can't just sit on the cash for forever. If you rolled over the distribution to a qualifying plan or you made the rollover in 2019, include a statement explaining what you did. Okay? So here's exception number 2. If any of the following apply, enter the total distribution line 4A and see Form 8606 and its instructions to figure the amount to enter on line 4B. Okay, so you received a distribution from an IRA other than a Roth IRA, and you made a non-deductible contribution to any of your traditional SEP or SEP IRAs for 2018 or earlier year, or if you made a non-deductible contribution to the IRAs for 2018. Number 2, you received distribution from Roth IRA, and so there's exceptions down here. Distribution code Q is shown on box 7 in Form 1098-R. So this is just in the Form 1040 instructions, page 29. So there's some exceptions to what happens if you receive a 1099-R. There's a rollover exception. There's distribution exception. And then exception number 3 is the qualified charitable distributions, the QCD. What you should do then. So if you just give it to a qualified charity, just remember generally your qualified charitable distribution for the year can't be more than $100,000. So in a joint return, your spouse can also have a QCD of up to $100,000. The amount is limited to the amount that you'd otherwise include in your income. If your IRA is non-deductible, consider paid out otherwise taxable income. So remember, you can't claim a charitable contribution deduction for any QCD not included in your income, right? So you can't double dip. You can't get a tax-free distribution and then try to claim a charitable contribution deduction. You can't double dip. That's what the instruction is saying. If all the distributions of the health savings account, total distribution on 4A, the total amount. Let's see, funding distribution. Okay, so what happens if you have more than one exception? So include a statement showing what exactly. So for example, if you had a QCD, a qualified charitable distribution, and you had a rollover, so you'd have to include a statement, and you include except for, but you do not need to attach a statement if only exception 2 and one other exception applies. So that's right here. So if you have exception 2, you don't need to include a statement. But if you have, like, as I said, a rollover, exception 1, or you have a qualified charitable distribution, exception 3, then you need to include a statement. That's a very weird way of stating that. Or if you have a rollover and a health savings account distribution, So exception 1, 3, or 4, if you have two of any of those, you need to include a statement. But if you include exception 2 and one other one, then you don't need to include a statement. That's what it says right here. Let's see, yada yada, if you pay additional tax. Yeah, so there's penalties if you pull things out inappropriately. So these are the Inform 1040 instructions, page 29 of the IRS 2018 version. Hopefully this has been helpful.